traders, Raghee here, and in this update, we're going to address the question that I've been getting the most of, and that is, Rag, is this the bottom? So, first of all, let's be realistic. Nobody knows. However, is this move indicative of a group of market participants that really feel that despite the fact that we are going to see at least a quarter-point hike in May and a quarter-point hike in June, and likely at least another 3 to 4 quarter-point hikes, whether or not we get a half-point hike at any one of the meetings, is this a market that is fully discounting that number of hikes and doesn't care and wants to rally anyway? And the answer is not as easy as, I'd love to give you a yes or no answer. The answer is it depends on where you're looking. And it really is going to be very important, as we've talked about throughout so far 2022, to be specific about the stock, the sector, and the index that you're looking at for strength or for weakness. So let's tackle tech here. The reason I like the tech narrative is because I think a very clear trend for us futures traders, and even if you're looking at the ETF, IEF, or if you're looking at the TNX 10-year yield, that yield is moving higher. And generally speaking, I believe that's going to put the pressure on tech. Let's talk about how short squeezes happen and really where we could be within the context of this short squeeze. Do we know it's a short squeeze? I really don't. But I do know short squeezes move in terms of pain. How long will they last? Well, how long will the pain last? Once we took out, let me show you something here. We're going to get into some volume ledges. This is something that I use in all my trading. Once we got through, so folks ask me, Rag, where did this really start to max out pain? If we have a high number of trades that executed in this area, and they are short, and they are quote unquote squeezed. Why are they squeezed? Higher highs, the shorts are losing value. This is where the pain really occurred. If you are short and you cover that position, it's not a cover, it's a buy. It's not a net long, really, for you, but it is for somebody else, and it's a buy. So you've got to buy to cover your short, which sort of, in a short squeeze, in any kind of momentum scenario, and a short squeeze is a momentum scenario, momentum begets momentum. Well, that level right there was one I was frankly expecting to hold, and then it didn't. And when it didn't, this is where, as far as I'm concerned, that squeeze starts to really become quite the boa constrictor. But you see how the volume gets kind of thinnish up in here? Who's it hurting, right? Who is getting hurt up here? Well, frankly, nobody. So there's no more shorts to necessarily squeeze. That doesn't mean that buyers couldn't, of their own volition, continue to make the market move higher, but the short squeeze part of this, as far as I'm concerned, is over. And now we land at the equator. Now we are sitting at the 200 exponential moving average. So this is a test. This is really a test for buyers, right? Now, rather than crushing shorts as they did back in here, and quite successfully, might I add, now they've got to have more traders willing to buy at higher highs, not necessarily short positions covering. So everyone, hopefully that makes sense. Does everyone hurt equally up in here? No, not like they did down in here. Fewer people to short squeeze. Okay. So volume is one way to decode this. Now what we want to do is start asking ourselves, hey, what are the weaker corners of tech at the sector level, XLC, and even at the stock level? What are those downtrends that are still very much intact? Below their 200, still predominantly red grab candles, or even better, still red over red structure, right? That's where the edge is going to be found, right? And a lot of times that's going to be in specific, there's a number of consumer discretionary stocks that I love the look of. Starbucks, Nike, even though Nike had a heck of a day today, TJ Maxx, right? There are a number of individual stocks that look really weak. This is where a futures trader can really take advantage of the fact that we understand index sector stock. And if you're not a futures trader watching this, embrace index sector stock. Embrace the boat and tides. This is where you're going to find what you trade is more important than how you trade it. Am I going to be better off shorting the Qs or XLC? I like XLC better. Am I going to be better off shorting XLY or maybe Starbucks within it, right? So this is where we start to understand what you trade is more important than how you trade it. What you trade is what we focus on in futures, right? Do we like ZC over, say, wheat? I actually do. I think the structure is far better and a far more solid macroeconomic trend with less dramatics, right? What we trade, corn over wheat, and even beans over wheat. Does that open the door to something like DBA? Absolutely. This is the S&P 500 of commodities. Beautiful bounce. What we trade, in this case, a long position, right? What we trade is more important than how we trade it. Do we love the long positions in crude oil? And relatedly, in oil stocks? Absolutely, right? So if this resonates with you, check out, and this is the last week, gang, check out the webinar replay over at simplertrading.com/timeless-replay. These are the timeless processes that I've used throughout my career. What the great thing is we've been able to automate so much of this by way of the JT Multi and the grab candles and the wave and the Darvis 2.0 and even the volume that hopefully, this may not be the first time you've heard me talk about volume, but I hope that's got, you're curious about, hey, what can volume tell me about some of these levels that I was uncertain about, right? So this is the kind of thing that we do. The promotion ends this Friday to come join me in the Mastery, the Sector Secrets Mastery, our very first bonus session where we're going to dive into topics like this and a whole lot more start on Monday, March 28th. All right. So I really invite you just to check out the webinar first. Find out if this process makes sense for you. Find out if you resonate with it. This is a good glimpse into the process, right? Through the viewpoint of these futures contracts and the indices, etc. So hope that helps. Leave your questions below here at the Simpler Trading YouTube channel. Join me each and every morning, 9 a.m. Eastern, for Charts and Coffee if you have questions about the kind of setups that we're talking about here in the video. All right, so a lot of ways you can find me. And then, of course, leave your comments, leave your questions. And if we're moving the needle for you, smash that thumbs up button, smash that like button. And if I'm not moving the needle for you, leave me a question or leave me a comment and let me know how I can. All right? Okay, gang. So that's it for today's update. I'll see you all at Charts and Coffee tomorrow morning, Wednesday morning, 9 a.m. right here at the Simpler Trading YouTube channel. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.